This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with Filipe Portela, managing partner of COREangels Impact. COREangels Impact makes angel investing professional and global, improving outcomes while contributing and enjoying the journey. They're available to accept higher risk and help founders add value. They put in the initial funding and go with promoters to create attractive startups to reach new heights. Filipe, thank you for joining us.
Thank you, Hal. Happy to be here. Pleasure.
So what was your background before investing in early stage companies? What did you do before this?
Are you sure we have enough time for that? But I'll try to keep it brief. But funny enough, actually my first degree, let's call it, or college degree, was actually in physiotherapy. And I was a physiotherapist for 7 years, actually. But apart from that, I'm also been an entrepreneur for quite some time, for actually 20 years now. And that's how then I got into investment, because I think it's a natural step in a sense that after you are an entrepreneur and after you have some success, I would say I had my fair share of successes and failures. But after you had some success, that you want to help other entrepreneurs to be successful also. And that was my way into the investment side. It was basically a wish to help other entrepreneurs, and that's why I chose the early stage also. So because I saw a gap there.
Great. Well, tell us more about your angel network.
Yeah, so COREangels Impact is part of an angel network, like you mentioned, and this is basically a new concept. I would say a fairly new concept, because we have a common brand and we have a common back office. But in practice, we are different groups with different investment theses and different investors. But being part of this network allows us, of course, to leverage some resources, mainly the knowledge or the power of knowledge of these different gatekeepers. So we are 4 groups at the moment. So 4 gatekeepers, 4 principals, so the people that manage these different funds. And basically, we leverage each other's knowledges, because we have people investing. So, for instance, we invest in pre-seed impact investment across Europe. Then we have Marco that invests in Portuguese deals. We have Mauricio that invests in Brazilian deals coming to Europe. And then we have also Guillermo investing in Spain. So in the end, is a lot of knowledge and network happening that we can cross-sell or cross-exchange between us. And in the end, of course, to support our entrepreneurs and to do better investment for our investors, of course.
Great. Well, let's talk about the state of angel investing. How do you see the industry evolving for angel groups these days?
Yeah, so I see definitely a trend there, and the trend I see is the more professionalization of this business angel group. So I would say that the business angel activity started more as an individual activity. So again, entrepreneurs that they were somehow successful, and then they started to invest in other entrepreneurs, and they started to do this by themselves alone. Then we started to see these business angels starting to work together, so starting doing groups, starting to do syndicates. And now what I see is definitely a professionalization. So these groups becoming more and more professional, and like being in a way, let's call it small venture capital or small VCs. But in the end, their goals is the same. So invest smaller tickets, usually in an earlier stage, but they want to see also their portfolio to be successful. And they want to be there to help these entrepreneurs, to these companies to be successful. Again, in a more professional way, in a more, I would say, more side by side than just financial investment.
And so in the next 5 years, what do you think is the biggest change we'll see with angel groups?
Yeah, so definitely I would see a change. I would see also more professionalization, just to focus again on that topic. I would see also some more competition from some VCs, because definitely some VCs are also expanding. VCs that are going into the private equity stage, I would say, but they are also going for the business angel stage. So business angels, they have to be more professional in the way if they can support, if they want to support this competition from the VCs, because either we like it or not, VCs are traditionally more professional or more structured, if you want to call it, than business angels. Again, business angels are more informal groups, people that just get together and invest together, and they need to improve this situation and to be more structured, to be more efficient also, in order to compete with this entrance of the venture capital world into the business angel world. And for me, to be honest, they are two different worlds. And I would keep them separate, because business angel is one thing and venture capital is another thing. And the way you invest and the way you decide whether to invest or not, in my opinion, they are totally different ways.
And so when you run your angel network, what's the biggest challenge you face today?
Well, one of the main challenges I was expecting to have was to get deal flow, to be honest, because we are investing in a niche market. So impact pre-seed, I was expecting to be quite hard to find good deals. And that's not happening, to be honest. So we are having access to a lot more deals than we were expecting, which is good news, I would say, because definitely the market is out there. There are a lot of entrepreneurs and a lot of good entrepreneurs out there wishing to create this new kind of business. So I would say that our biggest struggle, in a sense, is actually selling these or getting new investors. I would say that this is still a relatively new topic, especially in Europe, because we are based in Portugal, so Europe. And especially in Europe, to sell venture capital, to sell the asset of investment in startup is still something new. So this is our main struggle, I would say. It's basically to try for this old money, in the sense, for them to diversify their portfolio, and to start into investing more in innovation, and to start to invest more in startups and in the new economy, in the sense.
Okay. So what is your investment thesis for your group? What exactly is the criteria you look for investing in a startup?
Yeah. So we are pre-seed impact investment, and we invest in European-based companies. They can have activity outside of Europe, but at the moment we are investing European-based. And for us, impact. So because we're talking about impact, but what is impact, right? For us, impact, we have it really clear, and we divide impact into three levels, or into three tiers, if you want to call it. So the first tier is the ESG investment, so economical, social, and governance. And this is basically an investment of exclusion. So this is saying that, okay, we will not invest in weapons, in tobacco, in oil, stuff like this, okay? And this is not the investment we do, okay? So impact investment for us is not this. And then you have a second line, which is the B Corp line, which is basically the companies that are concerned, that are worried about all of their stakeholders, all of their value chain. So I would say it is a little more in depth comparing to the first line. But this is also not the type of companies we are looking for. So the type of companies that we are looking for, the type of impact we are looking for and that we are investing, is in companies that are actively contributing with a solution or for a solution for a social or environmental problem. Okay? And this is the impact we are looking for. So we don't invest in companies that give 10% for charity, for instance. So we only invest in companies by selling what they are selling, or by doing the activity they are doing. They are improving, or they are helping to solve a social or environmental problem. I can give a couple of examples, because usually it helps to frame this. For instance, we invested in a mental health company that what they did, besides they created a marketplace, so they digitized the psychology appointment. But what they did, they also brought the group experience to the online state. So what it allows is for anyone that has a smartphone, a laptop or whatever that can access mental health. And more importantly, because they are doing this in group, they can access mental health support in a more affordable way. So it's basically cheaper for them. So now people have more access to mental health support and in a cheaper way. And this is really, really important. We also invested in another company that is a mixture of fintech and sustainability, because what they do, basically, they help people track their carbon footprint, and they help this by automatically tapping into the people's bank account, and by their spending, they will know how much CO2 they are emitting with their purchases, and what they will do, they will give people, their customers, advice on how to reduce these carbon footprints, and they will allow them also to offset this CO2 footprint. So basically, they are helping every one of us to lower our carbon footprint, so helping with the environment. And I could give some couple more examples, but this is the type of solutions that we are looking for, the type of solutions we invest.
Sounds good. So you have a fund, and can you tell us more about how it works?
Yeah, so basically this is what we have at the moment. It is a business angel fund, so it's not a business angel group. And for us, it's quite different in that way, because what happens is that the investors, they put their money upfront in the fund. So the investors, they are still business angels, and they are still the ones deciding in which companies we invest and don't invest. So we still do investment committees and all of that, but we don't do a syndicate every time we do an investment committee or every time we do investment. So we always invest with the same company, with the same vehicle. But the investors are the ones choosing which companies are invested or not. And the management team is the one responsible for choosing, for doing the scouting, of course, and for choosing which company goes to the investment committee or not. And just to give you an idea, we are having an investment committee every couple of 2-3 months. We see about 50 companies per month. And I see, talking with them and actually doing some due diligence. So for each investment committee, we see about 100, 150 companies, and then we take three companies, to the investment committee, and we invest on average in 1 or 2 companies per investment committee. So this is a very thorough process, and we are investing in about 0.5-1% of all the companies we see. So this is a very thorough process at the moment.
Great. And so what excites you right now?
Yeah, so a lot of things, to be honest, and I'm quite happy that we are getting much more deal flow than we were hoping to be honest. So this is a very good indicator, because I was expecting the market to make this shift and for us to have more impact companies, because I truly believe this is the future. In less than 10 years, every company is going to be social or going to be impactful in one way or another, if they want to continue to do business, for sure. And one thing that really excites us is that COREangels Impact is doing so well. I would say that we are actually transforming this into a VC fund, so into a venture capital fund, in a way, because what we want is just to have more money in order to reach to more deals, and that's the only reason we want to transform this into a venture capital. It's because we are getting a lot of deals, and we are not tapping into all of the deals we would like to tap. So we need to choose a lot, and we would like to do more investment. So we are basically just fundraising more in order to invest in more companies, in order to support more entrepreneurs. So we are quite excited about that, about those next steps.
Great. Well, you see a lot of startups, and you work with a lot of investors. What's your advice for people investing in startups? What do you tell them to do before they write that first check?
Oh, that is a hard question. But usually a recommendation is always have a portfolio. So, and by that I mean try to diversify your investments. one common mistake I see a lot is that, especially in business angel investment, is that people do this because of passion, so because they like the team, they like the company, and there is no wrong with that. Okay, that is great. That is the right reason to do investment. But the thing is that we need to be a little bit rational also. So we need to do at least 10, 20 investments, something like that, in order to diversify our risk. If we only do 2 or 3 investments, the probability of those investments going bad is very high. But the probability of 20 investments going bad, it's much lower. So my recommendation is always invest with a portfolio. Try to have a portfolio, diversify your investments, definitely. If possible, by sector or by geography or whatever it is, but try to diversify your portfolios and don't put all of your eggs in the same nest. If you do it alone or if you do it in a group or with a syndicate, it's not relevant. It's just diversify your portfolio.
Great. Then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise funding?
Yeah, for that I have a straight answer. And usually my answer for that is don't do it. That is my first recommendation. So my recommendation to companies is always, so looking for investors should be a last resource, in the sense that it's not easy. It's not an easy process to find the right investors, and it's not an easy process to have investors on board. So my recommendation is always try to find some other way, try to do pre-sales, try to do crowdfunding, try to do whatever it is, grants or awards or acceleration, if that makes sense. But getting investors and getting investment in a company, it's not an easy process. And the entrepreneurs, they should be ready for that. They should be ready for that process. And they should be aware that having an investor is like being in a relationship. So there are going to be ups and downs for sure. And in the end, you just need to like the person that is on the other side of the table, you know. So you need to be able to talk to that person and to have a drink with that person. And if you are not able to do that, if you are not able to share your fears and your conquers with the person that is on the other side of the table, don't do it. So don't accept that investment just because you need the money. That is the wrong reason to do it, and things are going to go wrong if you do it just for the money. An investor should be a partner and should be there to help you and to support the entrepreneur, with much more than just capital. Otherwise, things are going to go south either sooner or later, for sure.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
That is another great question. Not sure. I think we covered quite a lot of topics. I would just say, if you are not looking yet at impact investment, look at it. It is the next trend, or it is the trend already. And I do believe that in the next years, within the next 10 years, it's going to be the sector that's going to grow the most. And it's going to be the best sector for everyone. And I mean also financially. So not just for the terms of social and environmental sustainability and all of that. I also believe that financially it's going to give the best returns. I'm really confident on that. So if you are not looking at it yet, I would advise you to start looking for this sector.
Very good. Well, so how best for listeners to get back in touch with you?
Yeah, just LinkedIn. I think it's the best way. I'm very responsive on LinkedIn. COREangels website also, COREangels.com also if you want. But LinkedIn, I would say it's the best way. And if I can help with anything, mainly from within Portugal or Europe, I'm here to help for sure.
Great. Well, I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you, Al. It was a pleasure, and stay safe.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.